Well, it looks like the MAGA wealth effect is kicking in, and that means that metal price is going to calm down for a little bit while cryptos take off. Let's talk about this one. All right, so want to take a quick minute, share some thoughts in reference to what I call the MAGA wealth effect. That's the Make America Great Again wealth effect, given all the euphoria about the impending presidential transition with Donald Trump coming back into the White House, if that plays out the way that everyone hopes. So as of right now, there's more excitement about digital wealth and tangible wealth. So therefore, we're going to see a lot more price appreciation in the digital space just because that's where the system is heading. We're moving forward, people, regardless of what people think. But then again, that's a good opportunity for those who realize the importance of having something real and tangible in your hands. So in this little video here, I want to share my 2 cents on recent visual aid I put together entitled the MAGA Wealth Effect. And so I'm going to share my 2 cents on it as well as get your take. So if you guys want to see more of these little quick takes, make sure you subscribe, click that bell notification so you'll be notified. And then as always, if you find value here, hit that thumbs up button, show your support for the channel. And I definitely look forward to bringing you more of these little quick takes here. So let's jump right in. So as you can see on the screen right here, as of right now this morning, silver heading down below $30 perhaps. And of course, gold is trending down as well. We're at $2,600. And no one should be surprised whatsoever that over the last week, everything in the digital asset space is in the green and we haven't seen nothing yet. To see all this stuff unfold now for me is quite predictable just because I know, as well as you who've been paying attention, where this system has to go, and it has to go solely digital at some point. And given the current mess we're in with 36 trillion plus all the other stuff is unfolding, this country needs as many distractions as they can get just because the debt is beyond sustainable and you factor in the political divide, the 2-year recession we've been in that might be officially announced in January of next year, the moment Trump walked into the White House, if we get to that point. This country is in need of some type of hope, financially speaking. And what better way to do that other than using an asset class that was placed strategically in this moment in time for the purpose of helping to pull off the greatest monetary heist in human history with the slow evolution of tangible property to claims on wealth to giving people shares in blockchains as a way to absorb some of this liquidity that's coming in the days ahead. So right now we're witnessing what I believe is just the beginning of this illusionary wealth effect that's coming just because it's all based upon extending the lifeline of the Federal Reserve note as long as they can and has everything to do with the consumer confidence. So people within the United States of America still feel confident that they can participate in some type of wealth effect where they're able to witness on a screen somewhere, whether it be their portfolios, any type of assets they have or wealth that's within this current digital structure, the price of all that activity going up and up, so that it gives people confidence that they're on the winning side of this transition. But in actuality, because it's all centered around the Federal Reserve note, aka debt, in the long run, no matter how high your nominal gains go, if it's denominated in a currency that's going to zero, are you really winning at all? And that's the whole point in this MAGA wealth effect. The goal is to make people feel as if they're profiting and benefiting of this transition, but in actuality, our currency being obliterated is being destroyed in real time. And so let's look into the MAGA wealth effect that I've been talking about. And as you can see on the screen here, this is what I consider the transition from the old to the accepted to the preferred, all on one chart right here. As you can see beneath me right here, we have an odometer basically telling you what's hot right now and what's preferred. And behind all this, place what I consider to be the 3 most crucial entities, either the creators, the backers, or the intended monetary mediums that's being presented to the world right now. And so starting on the far end of the screen here, everyone that knows the true history of what money is and will be in the future has to do with tangible assets that come from the earth and that have no counterparty risk and originates for and by the people. And that goes all the way back to 1792 when the United States Mint was first formed. And since then, our politicians and political figures within the mainstream media don't even mention the word United States Mint. It's only the alternative media that know what's really going on, focused on the accumulation of gold and silver coins. And so one thing I do not expect to hear come out of Donald Trump's mouth is anything to do with the United States Mint. And you can take that all the way to the bank. And so that's why on this odometer here, metals is in the red, because it's not to be talked about from the mainstream media. And then here in the center, the Federal Reserve note. That is what has become the preferred medium of exchange because it's all we've known for the last 100 plus years. And because it's legal tender, these paper notes here are in between the old and what's going to be considered the new, and which is beginning to experience a lot of difficulties because of the debt nature of this system. It's all centered around the erosion of the purchasing power of these notes in between. And then we have the new. We're going to hear way more about Bitcoin than we will our national currency, and definitely gold and silver. And that's not by coincidence. This is all a part of the transition out of the old into the new new, and this is the MAGA wealth effect that we're going to hear a lot more about. Because as I've mentioned before, this incoming administration, in order to revive this economy and make it appear as if things is able to move forward smoothly, Donald Trump's going to need as much help as he can get. And it's no coincidence that he became such digital currency tycoon over the last couple of months. It's because those advisors that are around him, as well as Wall Street, they recognize the opportunity in this transition. As we move forward in the weeks and months ahead, you better believe that Larry Fink's, JP Morgan, and all those other banking institutions will be favored above all else, just because the goal is to use the digital asset space as a buffer for all the old currency and all the new currency that's coming after there's some type of a systemic event. And the system requires some type of shock in the form of 10 and 20 trillion just to get started. And instead of that currency going directly into traditional assets only, such as stock markets, real estate, and other forms of commodities beyond gold and silver, they will prefer if it goes into the digital asset space because of BlackRock's, ETFs, Michael Saylor's, Bitcoin Stash, or the other institutions that have got in on this as the early adopters. They're going to benefit substantially, and it's going to create an artificial boom in the economy because a lot of sectors that's participating in this will do extremely well. Therefore, the stock market will be benefiting from this, the AI side, the robotic side, and the 1 to 2% of the population within this country that actually hold assets will be doing good as well. Therefore, they're going to spend more, perhaps, creating this boost in the economy, making it look like this wealth effect is concentrated from the hands of the original holders of these cryptos all the way down to the more recent adopters that will participate in this wealth effect when everybody look at their screens. So the fact that gold and silver is cooling off is not a surprise whatsoever, because when people know where the funds are flowing, they try to front run the activity by either dialing back activity in one or selling off some to go get into something else. So that's just a typical pathway for those who want to profit off this transition that we're in. And so it wouldn't surprise me whatsoever that this type of activity is happening internationally as well, because more people who realize currency is going to flow want to get ahead of that, therefore freeing up any excess capital they have or disposable income to go buy what they anticipate is going to go up right away. But then again, that's a benefit for those who realize the importance of gold and silver as insurance against the currency. Because while people are running towards the gains in crypto, it will definitely slow things down in the metal space. But then again, for those who realize where everything's going to end up at the very end of all this in something real and tangible, that just gives you more time to be able to accumulate and add to your stack or expand your currency insurance policy, as I like to say, so that allows you and those that speculate in the digital space to be able to take some of those profits and some of those gains, put it back into something real and tangible, and be even better positioned in the days ahead. But at the end of the day, as I mentioned, the digital transition is real. It's not going nowhere. It has to succeed in order for the controlling forces to take this economy where they're trying to take it. And therefore, that creates the asset appreciation that I mentioned, which creates the wealth effect, of which our politicians would love to have all of America experience. And so you're going to have the Kathy Loomises, both Congress and the House, coming together with some type of crypto bill to provide more clarity for the banks, that is. And then the bank's going to get involved, and then allow depositors within the banking system to be able to store their cryptos within the banking coffers, providing fees for the banks and creating additional products that the banks can sell to depositors. And those are all the steps for the slow and steady capture of the DeFi space by the TradFi space. Once again, everything is predictable. There should be no surprises whatsoever in what's going on now. And so these are the ways that they're trying to propel the system forward and attach the idea of making America great again, because they want everyone that's in the digital space to feel the effects of this wealth transfer until the truth is revealed down the line, when everyone realizes they've been duped again. And hopefully between now and then, you take advantage of the manipulation, because it's always your friend, especially if you're on the side of truth. But anyway, just sharing my 2 cents on everything. I'm curious to get your thoughts. What are your thoughts on this MAGA wealth effect chart? What can I add to it? What should I take away from it? Let me know. Drop some comments down below. Definitely would love to have some back and forth. And as always, if you found value, hit that thumbs up button, drop a comment, subscribe, and I'll catch you guys later. Peace.